What's good? What's good? Welcome back to Invest and Trade with Jax. Hope you guys had an incredible weekend. We're going to go over our friend Matic. Currently, we're sitting at 175. We're up about 0.17 on the day. In my opinion, the market is just in the calm before the storm. And I think we're in store for some incredibly juicy gains. But I'm not your financial advisor. I'm just a young guy from Canada. So let's go over Matic, guys. Currently sitting on a market cap of 12.03 billion. And the 24-hour volume is 669 million. Ladies and gentlemen, if you're new to crypto.com, make sure to sign up to the world's fastest crypto growing app. You can grab one of their incredible Visa cards for cashback in crypto, free Spotify, Netflix, Prime, travel incentives, depending on the level of card that you have, as well as $25 in their native coin Crow, which has been absolutely exploding just for signing up through my referral. So I was talking about us seeing that reversal pattern, and we're seeing a couple here. We have our ascending triangle that we talked about forming in our last video, and we have a little bit of an inverse head and shoulders. Here's your left shoulder, here's your head, and here's your right shoulder. So if we do break out of the neckline here, your breakout target is basically the same for both patterns and can bring Matic back up right up to about that $1.89. We had our descending triangle. We met our target with our wick here. And if you're dollar cost averaging with all of our buy zones, currently you're sitting at about $1.75. So you're sitting pretty, in my opinion, for the move back up. We are having that bullish divergence. We created a lower low and we created a higher low on the chart. So we may continue to see a little bit of consolidation here for the next few days. If we quickly look at Bitcoin, you can see with Bitcoin, we're in an ascending triangle and we're inching closer to the apex. So we should see a breakout over the next few days. If we break up, it is a bullish pattern, guys. Your target is 77.5. If we break down, the target is 54.3. I do have a bit more of a bias to a breakout to the upside. I'll probably go over that in a separate video here. So let's jump into Matic here on the daily time frame. So you can see we're consolidating in between the EMAs. Now, I guess you could make the argument here that this is a bear pennant, but honestly I don't think it's a likely scenario to play out. But we can still give our measurement here, just due to the fact of our wick kind of invalidates this pattern, but it would bring us down to about $1.39. But as I've been saying, I think it would be much more likely if we were to come down here that we bounce right off the golden ratio at $1.59 and keep a close eye on the 55 EMA on the daily. So let's hop over to Ethereum. So the first thing I wanted to make you guys aware of is we're just having the bullish cross on the 4-hour MACD, and for over a month, every time we've had the bullish cross, we've seen a pump. We had the bullish cross right here, pump, bullish cross, pump. Scroll down, let me open this up, just make it more visible. Bullish cross right here, pump as well, bullish cross, pump. So for over a month, every time we have the bullish cross on the MACD, we see a pump back to the upside. There's also a double bottom pattern here for ETH. You can see we made a bottom, we make it a second bottom. We've already broken our neckline. We're currently back testing it as support. So your breakout target here from this double bottom would bring you back up to the all-time high, which is at 4866, and your target for your next impulsive wave is up at 5144. We had that bearish divergence on the 4-hour. It's played out. I don't think we're going to come all the way down to oversold. The bullish cross is a strong signal of continuation, in my opinion. And I really do think it's just the calm before the storm. So if we look at Ethereum here on the daily, I had been talking about the possibility of that ABC correction, but I don't think it's a likely scenario. As long as we can hold the EMAs here and we see continuation, I think it would be more likely that we would see a larger correction, either at the 1.272 coming in at 5731, or the 1.414, which is coming in at about 6392, very close to the target from our larger cup and handle. I think that's when we would see a bit of a larger correction. But as of right now, as long as we hold the 20 EMA, we're looking strong for continuation, and that bullish cross on the 4-hour is a strong sign that we're going to see a breakout, in my opinion. But if we were to roll over, always a possibility, guys, I think this would be a very strong level of support coming in at 4440. Support right here, previous swing high for ETH. So we're basically just waiting for our breakout. It was pretty quiet over the weekend, not much movement here, but it gave time for our reversal patterns to take place for Polygon. So do watch for the break. It would bring you up to 189. And if this pattern were to break down here, I'll also give you your breakdown target. Yeah, that would bring Matic right down to the golden ratio, coming in at about $1.56. So do keep an eye on that. If we do break down, we can head down to that $1.56. Could give you a beautiful opportunity to hit your buy zone once again. If you enter with equal equity, it will bring down your average price. price. And if you're leverage trading, you have to double your margin, and that would bring your average price down to about $1.67, and you get ready to ride the slingshot back up. I'll give you our bull run targets here for Matic. We have the 1.618 coming in at 677, and we have our dream price coming in at 1181 based off of our Elliott wave theory, which I've gone over in many videos. All right, that's it for this one. Shout out to the Discord. We have over 1,000 members posting chart patterns, talking all things crypto. It's the price of a coffee. You can sign up through the Patreon. Make sure to check out crypto.com, smash the like button, and I'll see you in the next one. Much love. Take care.